ladies and gentlemen, at the same time, more and more buyers are coming out and more information is available. More and more people are getting confused. The industry is becoming more transparent in an effort to help home buyers become informed about changes that may affect their process. The sheer amount of information can lead to confusion. As a matter of fact, in a recent survey, it showed that 65% of all the people responding to the survey felt overwhelmed by the amount of information available on home financing. More than 6 out of 10 people are overwhelmed. They can't fully understand it. And when we're talking about millennials, which Dave brought up at the very beginning, which is going to be a driving force over the next couple of years, 3 out of 4 of the people under the age of 30 are overwhelmed with what's taking place. Well, what does that mean? Well, Nomura analyst, they put this out to their clients. It's not that millennials and any other potential home buyer aren't qualified in terms of their credit scores or in how much they have saved for the down payment. It's they think they're not qualified, or they think that they don't have a big enough down payment. So what do we have here? We have a group of buyers, the consumer itself, large numbers, 65% of everyone out there, 75% of those under the age of 30, are now saying, I'm confused, and surveys have proven that to be correct. Ivy Zellman, who runs Zellman & Associates, did a survey. How much of a down payment do you really need? 39%, 4 out of 10, almost 4 out of 10 people that they surveyed said you need at least 15% down or else you can't get a house. Wow. That means 4 out of 10 people think they shouldn't even look for a house if they don't have the 10% down. I'm sorry, the 15% down. And between the ages between the 30 and 34, 42% believe that. Well, what is that creating right now? Well, you can look at it 2 ways. First of all, there's tremendous opportunity for the true educators on this webinar, the people who really believe that their job is to help the consumer make a confident buying decision. If you're in that category, if you want to really educate, not just sell, but educate the consumer to that situation, we're going to help a whole bunch of people move forward. And again, I don't think it's just an opportunity. I do think it's a responsibility. As a matter of fact, when Freddie Mac saw the Ivy Zellman survey, they came out on their blog saying this. They wanted people to understand a person can get a conforming conventional mortgage with a down payment of as little as 5%, sometimes with as little as 3% coming out of their own pockets. Freddie Mac's purchase of mortgages with down payments under 10% more than quadrupled between 2009 and 2013. It's not that the number of those mortgages are decreasing, they're actually increasing 4 times. The consumer just doesn't know that. More than 1 in 5 borrowers took out a conforming conventional mortgage in 2014, put down 50% or less. So what we're looking at right now, ladies and gentlemen, is the fact that the consumer is confused, they're inundated with information, and they're looking for someone to help them. And Christina Boyle, Freddie Mac's Vice President and Head of Single Family Sales and Relationship Management, said this: letting more consumers know how down payments are determined could bring more qualified borrowers off the sidelines. Depending on their credit history and other factors, many borrowers can expect to make a down payment of about 5 or 10%. We have to let them know that. That's part of our responsibility in what we do.